Good day Forex trader. Your USD Forex signal, bottoming signs emerge. There is a likelihood that the pair will keep rising as investors target the key resistance level at 1.1000. Bullish view. Buy the Euro USD pair and set a take profit at 1.100. Add a stop loss at 1.0800. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.0800 and a take profit at 1.0750. Add a stop loss at 1.0900. The Euro USD price rose slightly on Wednesday and early Thursday as investors wait for the latest European consumer inflation data. It rose to a high of 1.0851, which was the highest level since April 14. This price is slightly above this week's low of 1.0760. EU inflation data ahead. The Euro USD pair tilted upwards after the positive Eurozone industrial production data. According to Eurostat, production rose from -0.7% in January to 0.7% in February. This increase led to a year-on-year increase of 2%. However, Eurostat warned that production will ease in the coming months because of the ongoing crisis in Ukraine. Eurostat will publish the latest consumer inflation data on Thursday. Based on the preliminary numbers that were released recently, analysts expect that the headline CPI rose from 5.9% to 7.5% on a year-on-year basis. Excluding the volatile food and energy prices, analysts expect that the core CPI rose from 2.7% to 3%. Economists expect that inflation will keep rising in the coming months as the cost of energy rises. The EU is contemplating putting an embargo on Russian oil while Germany has resisted banning natural gas. Still, an informal embargo is expected to happen soon since the EU has resisted paying for the country's gas in ruble. The Euro USD pair will react to the latest economic data from the US. The Philadelphia Fed will publish the latest manufacturing index. With the cost of doing business rising, analysts expect that the index fell from 27.4 to 21.0. The Bureau of Labor Statistics will release last week's initial and continuing jobless claims numbers. The key mover for the pair will be speeches by Jerome Powell and Christine Lagarde. Powell will likely insist that higher rates and quantitative tightening will be needed to slow the rising inflation. Lagarde will also express caution. Euro USD forecast. After days of declines, there are signs that the pair has bottomed. It is trading at 1.0850, which is slightly above this week's low of 1.0757. It has also crossed the 25-day and 50-day moving averages while the MACD has crossed the neutral level. Other oscillators like the Chaikin and the Relative Strength Index, RSI, have also pointed upwards. Therefore, there is a likelihood that the pair will keep rising as investors target the key resistance level at 1.1000. A drop below the support at 1.0800 will invalidate this view. GBP USD Forex signal, pound set to retest the 1.300 support. The pair will likely resume the bearish trend as sellers target the horizontal line shown in purple at 1.300. Bearish view. Sell the GBP USD and set a take profit at 1.300. Add a stop loss at 1.3120. Timeline, 1 day. Bullish view. Set a buy stop at 1.3070 and a take profit at 1.3135. Add a stop loss at 1.3000. The GBP USD price was unchanged in the Asian session in a relatively calm week in the UK. The pair is trading at 1.3053, where it has been in the past few days. This price is about 1.9% below its highest level in March this year. US dollar in focus. The GBP USD pair has had a mixed week because of the limited economic data from the United Kingdom. Last week, the Office of National Statistics, ONS, published the most important numbers for the UK economy. For example, on Monday, the agency published relatively mild GDP numbers. The data revealed that the economy barely grew in January. On the following day, the agency released the latest jobs numbers that revealed that the unemployment rate has dropped to where it was before the pandemic started. The ONS then released the strong consumer and producer inflation numbers. In total, these numbers have jumped to the highest level in years. Therefore, with these numbers, investors have already predicted the next action by the Bank of England. The bank is expected to be a bit cautious about its rate hikes, although the hawkish sentiment will remain. The GBP/USD price action is mostly because of the US dollar. The currency jumped sharply this week as bond yields rose to multi-year highs. The dollar index moved to $101 for the first time in years. In the past 2 days, however, the situation has changed as the bond yield rally eases and as dollar holders start to take profits. On Wednesday, the U.S. published weak existing home sales. The data revealed that sales dropped from 5.93 million in February to about 5.73 million in March. This 2.7% decline happened as other data showed that the 30-year mortgage rate rose to 5.2%. The next key catalyst will be the upcoming speech by Jerome Powell. GBP/USD forecast. The GBP/USD pair has gone nowhere in the past few days. It has risen to a high of 1.3055, which was slightly above last week's low of 1.2971. The pair is hovering along the 25-period and 50-period moving averages, while the MACD has moved slightly above the neutral level. It is also below the descending trend line shown in black. Therefore, the pair will likely resume the bearish trend as sellers target the horizontal line shown in purple at 1.300. AUD/USD Forex signal, retest of 0.7500 can't be ruled out. The pair will likely keep rising as investors target the psychological level of 0.7500. Bullish view. Buy the AUD/USD and set a take profit at 0.7500. Add a stop loss at 0.7350. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7400 and a take profit at 0.7300. Add a stop loss at 0.7450. The AUD/USD pair continued its new bullish trend on Thursday morning as the US dollar started stabilizing. The pair rose to a high of 0.7445, which was slightly above this week's low of 0.7345. It remains significantly below the highest point this week. Australian economic recovery. On Tuesday, the International Monetary Fund, IMF, published a relatively dovish outlook of the global economy. It noted that the economy will expand by 3.6% this year, a few points lower than its previous estimate. It also expects that the Australian economy will slow down due to the ongoing COVID-19 pandemic in China. Precisely, it sees the economy expanding by 4.2% this year, which is in line with the expectations by the Reserve Bank of Australia. The country's economy will be helped by the relatively high commodity prices and the fact that the services sector is expected to do well. Australia reopened its borders to vaccinated people in the first quarter of the year. Analysts expect that the RBA will upgrade its view in its May meeting. They also expect that the bank will start hiking interest rates in June this year. The biggest concern for the Australian economy is that inflation is surging. The most recent data showed that it rose to 3.5% in the fourth quarter. The Australian Bureau of Statistics, ABS, will publish the latest inflation data next week. The AUD/USD pair rose as the strong bullish momentum eased. The dollar index has dropped to about $99.70, which is substantially lower than the highest point this week. In fact, the dollar has retreated against most currencies like the euro, Japanese yen, Canadian dollar, and the British pound. The next key catalyst will be a speech by Jerome Powell. AUD/USD forecast. The AUD/USD pair has made a steady recovery in the past few days. It is trading at 0.7447, which is slightly above the lowest point this week. It has moved slightly above the 25-day and 50-day moving averages. It has also moved above the ascending trend line shown in black. The MACD has moved slightly above the neutral level. At the same time, the pair is along the highest point in March. Therefore, the pair will likely keep rising as investors target the psychological level of 0.7500. In the medium term, however, the bearish trend will likely resume.